Bitcoin and Bitcoin Cash. So the difference between the two, it's a very common question. What is Bitcoin and what's Bitcoin Cash? Yeah, so Bitcoin Cash, okay, everyone knows what Bitcoin is. In whatever way it was explained to you, Bitcoin is it's a cryptocurrency. But then the Bitcoin Cash is what raises many questions. So Bitcoin Cash is it's a spin-off of Bitcoin. It was established in 2017. Yeah, so Bitcoin Cash being a spin-off, that sometimes the simplest explanations, they help you understand exactly what it is. Yeah, so if you watch series or movies or whatever, there's always a spin-off. If you watched, there was this thing called Vampire Diaries that had a spin-off into originals and something like that. Yeah, so that is what a spin-off is. Something that is so good, so profitable, they decide to expand it into another world and try to form some other kind of following. Yeah, so that's how Bitcoin Cash came in. And so it's also a cryptocurrency. It's not a real cash. It's not money that you can just hold. It's still also a cryptocurrency, and it's called Bitcoin Cash. Its value is not like that of Bitcoin. Bitcoin is very, very valuable. Bitcoin Cash is like 40 times smaller than Bitcoin. So it's not so big. But it is still a valuable asset because it is attached to Bitcoin and it is attached to the blockchain system. So that blockchain is it's primarily only for Bitcoin. I don't know if any other cryptocurrency is if it is attached to it. Yeah, so the whole intention behind all this blockchain method is the blockchain is like a computer system, and it encrypts information. It makes it very difficult to hack and access. So so that the way it encrypts its information is by using a digital cryptography. Yeah? A cryptography is if you've been watching those ancient, not even ancient movies, but any movie like Tomb Raider or whatever, where people move into these crypts, and there are all these hidden messages in some kind of puzzles or whatever. You have to turn it this way, turn it the other way until all the sides match, something like that. So that is a cryptography, something like that. So here for the blockchain, it is it's a digital cryptography that hides all this information and makes it impossible for anyone to access. Yeah? So the information of this currency, which is Bitcoin and every other cryptocurrency, that information and everyone's accounts and the value of your assets and everything, all that information is unhackable because it is protected through a system. It is encrypted using a digital cryptography. Yeah? So that's where the cryptocurrency things come from. So the currency, which is inside that cryptography, it becomes a cryptocurrency. Yeah? So it's not something very complex. Once you hear the word cryptocurrency, you start thinking about the moon and the stars and Jupiter, the red spot in Jupiter, and you think it's all connected. But it's very simple. It's just the information that is attached to this coin, to this currency. It is it is encrypted using a cryptography, so it becomes a cryptocurrency. Yeah, they should have gotten a more original name. This one sounds very nice, but as you get the explanation, it's not really, it doesn't become really that nice. It's like a mouse. Why do they call it a mouse? Because it looks like a mouse. Can you imagine? I should have called it something else. It would have been clever. A keyboard is a board with keys. Can you imagine? So the names, they sound very, very nice, but when you understand what exactly it is, it becomes very simple. So that's what a cryptocurrency is, and most currencies are based on countries. You have real economic activity that supports these currencies. If it's gold, sorry, not gold, but before, all printed money had the gold standard. So if you had gold worth $1 billion, then you would have $1 billion worth of gold, so you'd be able to print money worth that gold that you have, so that you don't give out your gold. You just have money to represent the gold and you trade that. But today, it's more or less, it's just the economic activity of a country. So the value of your country is based on how productive it is. It doesn't matter if you have gold mines or whatever, because Africa has the most gold and silver and diamonds and all that stuff. So if you put the money to be on that gold standard, then we shall be very rich. We are still, extremely rich. It's just, it just bugs your mind. But Africa is very, very rich in terms of assets and so many things. But in the world of money, is it's quite disturbing. Just imagine if you live in let's say in a place like Kololo, and you own that land and it's yours, but you're broke. You don't have money, physical money, currency. Then you're broke. Even if you're sitting on land that is worth millions of dollars, based on our market value of land. Yeah, I think Uganda is too rich. If you have such land that is worth millions of dollars, then the country is extremely rich. But anyway, so you have that land and you don't have money. That means you're broke. Yeah? If you're renting, you literally have no land, but you have some money. You're richer than that person. So money is, it's something that is quite disturbing, and that's what makes forex trading something very important, because you're living in this kind of money world. We're living in the world of money, where money has so much value. So if all our central banks are connected to one independent organization, which is the forex market, that means anyone can access our money through the forex market. Someone can trade Euro USD, make $1 million, and withdraw it from Uganda. And Uganda will lose $1 million like that. And that guy will earn it. One guy will earn that money. So that is one thing that you're trying to fight. By trading, there's no other way to fight it. You have to. It's now tug of war. Yeah, we didn't ask for the tug of war. Our hands were there like this, and the rope landed in our hands, and now they are pulling us. So we have no choice but to pull back. And you're going to pull back by investing. Okay, you can invest locally and whatever, but investing locally just keeps money circulating within our borders. If you invest internationally, then you circulate money from another country into this country. That's what's happening most of the time. People who come from other countries, they invest here and money goes back that side somehow. Yeah? So if we do the same here online, then we stand a chance. So some of the scales are always somehow balanced. You just have to want it. You just have to want it and go for it. You don't wait for someone to hold your hand along the way. Use all the tools available at your disposal, and finally you will benefit from it. So just imagine if Uganda has we have a budget of about $10 billion a year. But if guys trade, you can make more than that money in 1 year. You can make more than the budget. So once you achieve that, you've made more money than our government spends in 1 year. Then that money will not come from our government, obviously, because you're going to withdraw. You're going to withdraw a lot of money, as so many individuals. And the good thing, the banks are all internationally connected. You can do wire transfers from literally anywhere. So when you transfer all this money here, it's going to come from somewhere. And when that happens, then you'll realize how this program works. You understand how this forex trading works. So let's take a brief look at this Bitcoin chart, and we see how it has been performing, and why people are crying all over the world because of Bitcoin. So, okay, let's start from the beginning. It was in a range market. Let me mark that out. We have that top, and we have that bottom. So it used to be a range market like that. It was just in between 4,300. I think the very first date here is not recorded. We have prices from 2019. Okay, that is a bit far, but that is okay. So 2019, the price of Bitcoin was in between $4,000 and about $14,000 per coin. Those are the humble days when people were making a lot of money. Then one day it just boomed. I think that was 2020. Yeah, 2020 in November. It just started shooting up. So the first, that first bull, you can call it I think we're now familiar with those terms. So the first bull took it to about $41,000. And and then it continued like that. So from $41,000, it went up to $50,000. That $50,000 move was after Elon Musk tweeted about Bitcoin becoming an official currency used to purchase Tesla cars. So that was a very big move, and that tweet alone pushed the price up, which was quite impressive. It just makes you think twice about the value of money, because if one tweet can just push the coin that far, then either this man is either very influential or he represents a body of very influential people who have all put in an effort to push that price up. So, what happened at the face value was a tweet, but what could have happened behind that tweet could have been so many other things. Then that tweet continued to continue tweeting about other currencies, especially Dogecoin. Even took it to the moon, something like that. And Dogecoin being on the moon was quite impressive for so many people, because people love the moon. People just love the moon. You look at the moon and everything you imagine about it. You imagine vampires, werewolves, and whatever. All those are things that are associated with the moon. But yeah, it is still something that is of great value to so many people. And Dogecoin being on the moon, it subconsciously triggers a certain love for this coin, and so that's how these markets have been moving like that. It has been quite. You don't really get. We all know how money moves. We all know how currencies gain value. You can look at the price of US dollars here in Uganda. It gains value somehow. You look at economic activity here. You look at sometimes when you have a lot of stress, there's a lot of money being printed and all that. So it brings a lot of inflation, and that brings down the value of our currency. So you can trace how money gains value and how it loses value. But in a situation where someone just tweets and a currency just earns value, it just becomes extraordinarily very expensive. That is something totally. It's something that's a world apart. It's not something very, very common. So with things like that happening, they make you question how we're actually running these countries. I think the biggest thing you can know about how money is controlled is by regulation. And if you don't have a regulating body on a certain currency, then it can blow up. It can become so expensive, and it can make so many people so rich in a very short period of time. It can be, extremely. It can just bother you so much. So when we look at Bitcoin, so many people who bought coins when they were about $1, $0.5. They became billionaires, and without doing anything. You just imagine if Bitcoin was worth maybe $0.5 and you had $1,000, you'd buy about 2,000 Bitcoin. If you have 2,000 Bitcoin right now, you're very, very rich by doing nothing. You did nothing, and some guy tweeted and even made you richer by tweeting. So that sort of thing happens now, and everyone wants a piece of that action. Everyone wants to benefit like that. People want to know that I'm going to put in my small money, and I'm going to come out with very much money by doing nothing. And it is still possible. It's very possible right now that we have all this. There's a lot of innovation taking place. Too many financial programs, too much software, these computerized systems. They're all over the place, and not all of them are regulated, and even the regulators don't understand what they're doing. So yeah, because they don't understand how to regulate them, they don't understand how they are working, you can take advantage of that, and you can make a lot of money. One way is by, okay, it's normally if you're going to do nothing on a computer and expect it to make money for you, then you need to have some kind of computer programs running. So one very possible way that we have for us is by building expert advisors and these automated systems. They really they can make us a lot of money. Yeah, and you don't have to lift a finger. You just have to go through the hell of working on it and building it and testing it and ensuring that it will keep on working. You have to go through that, that hell. It's really a terrible experience. So you have to go through that, and then in the future, it will be the one making for you money. So this what they call this not this income that you work for, but that other, it's not silent income. That's another word that I had, but passive income. Yeah, that's the right word. Passive income. You don't really have to do anything, but the money just comes. That type of income is from bills and bonds, from buying shares, and you earn dividends and all that. Yeah? So investing in that, that can give you some passive income because you do absolutely nothing. Yeah? To make a profit from there, you just have to sit down and wait for your money to come. Yeah? Another form of passive income, maybe real estate. Yeah, not so much. Real estate, you have to put in some work. You have to go and demand people. You have to bring police, threaten them, switch off power, switch off water. Yes. Sometimes you even put padlocks there. There's So real estate is another. Is another funny thing. But that may qualify as passive income, where people have enough money to actually pay the rent. Yeah, if if the rent value in a country is maybe, if you look at the proportion, if let's say people earn on average about 1 million shillings, and let's say the value of rent is about 100,000 on average, so people earning 1 million on average and they're paying rent in 100K on average. There you're going to have you'll have a case of passive income in real estate, but if people are earning, 500K, and the rent is 450K, I'm telling you, your real estate will become, a war zone. You'll have to go there and fight with people and do all those sorts of things. You take excuses, and that's how it normally works. But so that somehow, it becomes relative. Passive income coming from real estate becomes relative to exactly, where you're investing. That's why you might need a specific type of people to rent your houses. So that that somehow doesn't give you the good picture of passive income in real estate. There are many other ways of getting this passive income, but passive income is where you do absolutely nothing and you earn. At the end of the day, imagine if you're a garbage collector and you tell people, I'm going to come to collect garbage and you have to pay me 100K every month. Whether you throw garbage or not, I'm coming for my 100K. Now that becomes passive income because you're doing nothing for that money. Because you're not going to say that this garbage, this bucket is worth 5K. I'm going to throw 20 buckets, and that makes it 100K. But what if I throw only one bucket? You won't come for 5K. You'll come for the full 100K. So that will become, that becomes passive income for whoever is collecting it like that. So that is another way of looking at it. There are always two sides to a coin. So you might be working somehow, but you have assured, money coming, by force. So that is one way, and you can see such cases in many cities around the world. So so here in this forex trading, passive income is automated systems. That is why they were created for that purpose, because there is a manual way of doing things. You actually work for your money. Then there's also the other side of earning your money passively. You do nothing and the trades enter, they exit, and you benefit like that. We've seen many examples of automated systems. I've been, I think last year, for the past 2 years, I've been showing many automated systems and showing you how they work. This one is based on this, one is based on that. Yeah, so I'll be showing you more about that. We shall go through a strategy, then put it into code and see how it works. But that is all for the purpose of achieving passive income. And the reason for that is, if you keep on working, if you keep on, working hard, it's good to work, but normally the person will give you the advice to work. The person is not working. The person will be earning from you, mostly. So, it's good to work, but then it's also good to live. Working is not living. So you need passive income to help you live, so that so that you're alive. Or else you can die when you're very young. So you have to have passive income. You have to plan for it. The only problem with passive income is that it's not easy to attain. It's not very easy to attain. That is why some people will tell you that I sell shoes and I make a lot of money from selling shoes, but I don't want to make shoes because making shoes is hard. They just don't understand that if they make shoes, then they're going to be, those shoes which they sell, they buy them at a certain price and sell them at a certain price. But if they make shoes, the price goes down almost 10 times. So the profit shoots. It becomes very big. So you earn more if you make the product than if you just buy the product and sell it. So shifting from doing this retail sales and shifting to manufacturing, that is like shifting from working and earning from your hourly work hours or daily work hours or monthly work hours to getting passive income. So, earning money passively is, it is a step ahead in every aspect. It's a step ahead financially, even spiritually. You might, you'll have more time to go to church or whatever if you're earning passively. So, that's another advantage. Then you can progress to bigger things. If people were digging all over the world, no one would be going to the moon. To do what? When there is, you have to go and weed the whole garden. Then why go to the moon? Why go to Mars? Such things wouldn't be there if we are concentrating on these basic things. So progress comes in ways of earning money in ways that don't really require your presence. So if you're making money from somewhere in your absence, that money is going to build you a lot, because you will have, you'll have what it takes to go and, to do so many other things elsewhere. That will be very, very, that will be very beneficial for you. So we need to have goals set. We're not just going to trade here manually and analyze every day and what. We need to progress. We shouldn't stay in one place for a long time. We need to really progress. And the best way of progressing here is not by getting more indicators and whatever, or learning more ways of analyzing, because we're going to really bury our heads into these computers analyzing these charts. But if we create automated systems and those systems start making money, and every strategy we learn that we used to trade manually, we make it automated as well, and that strategy also earns us more money, then we're going to have a very good track record of the passive income. So you'll have strategy 1 making you maybe $15 a day, strategy 2 about 8, strategy 3 about 30, another strategy earning you about maybe something like that. So you can be earning a very good amount of money passively when you have basically nothing else that is taking your time. And just like that, you're going to progress. Because I can assure you that people who trade Forex have been trading for many years. Very many years. Personally, I've been trading for very, very many years. So, and one thing you realize is that you make money, you lose money. You make money. When you have small money in your account, you lose small money. When you have a lot of money, you lose a lot of money. And the cycle keeps on repeating. But if you have a strategy that can go for maybe 5 years, just making you money, then you'll have moved a very big step ahead. And that will be That will be progress. That is serious progress. So we shouldn't stay in manual systems of doing things. Yeah, we should keep on doing that, but at the same time, we really need to up our game and start creating very powerful automated systems that are going to help us to progress further from where we are. Yeah? So let's take a break. When we return, we're going to look at this time we're going to look at these fundamental events for today, and we shall also look at the charts that are trading for today. And yeah, so when we return, that's what we're going to be looking at. So we'll see you after this break.